Telstra's had a good run of late, and today it hit a 3-month high as the legislation to split the company in two ground its way through the Senate. Investors have been tensely waiting to hear about the guaranteed returns under the NBN business plan. So what about the government's business case light that's been released? Well, at least one of Australia's leading academic accountants believes the Australian taxpayer is paying a heavy price for the float of Telstra. Andrew Robertson reports.
Professor Robert Walker is a fan of the National Broadband Network but blames the former Howard government for the problems Australia is facing.
It's a sorry indictment on the fact that the coalition government chose to sell Telstra for around $40 billion. Now we're having to pay about $14 billion to get back some of the infrastructure and the customer list and customer base.
Professor Walker says when set against the cost of the National Broadband Network, the public has paid a heavy price for the sale of Telstra.
At the time, many people were arguing that the government shouldn't sell basic infrastructure, particularly in the telecommunications industry, given the IT revolution that was going to transform the way society operates in this century. And I think events have proved that they're correct.
The Gillard government's NBN business case summary suggests Telstra will receive $13.8 billion for the sale of its copper wire network. Another $35.7 billion will be spent building the NBN for a total of just under $50 billion. The three tranches of the sale of Telstra reaped $38 billion for the public purse, but it also cost the government any future dividends from Telstra. Professor Walker is encouraged, though, by what he's read in the NBN business case summary, particularly the predicted rate of return greater than the long-term bond rate.
The Reserve Bank today says the long-term bond rate's about 4.5% for 10 years, 5.75 for 11. The investment is planned to go on for till 2021. It's going to make a positive rate of return while also providing these other social benefits. That's essentially a good story.
Not everyone shares that view, though, such as telecommunications analyst Teo Maas.
You would expect to see a lot of information to make up your mind whether this is a black hole for the taxpayer or whether this is actually going to make some money at the end of the day.
In particular, Teo Maas would have liked to see some detailed revenue projections. As a Telstra shareholder, he still has doubts about how much of the $14 billion it will actually receive.
There are quite a few hurdles that still need to be taken, and the most important one is the ACCC signing off on this deal as well. And obviously the ACCC is very worried about the fact that part of the deal is that Telstra will have to close its competing network, so its copper network and its cable network. And obviously that is not promoting competition.
At a customer level, the Australian Telecommunications User Group represents big telco customers such as companies like Qantas and Coles. It's pleased with what the government has released.
Whilst it's 30 pages and there's 400 pages in the full document, some critical matters were outlined in very brief form, I know, but critical to us, and they were there.
Most importantly for users of the National Broadband Network, there's an indication of what they'll be paying.
The confirmation that pricing is going to be set relative to current market pricing for equivalent products, that's important for us. Secondly, there's a commitment to reducing prices in nominal terms and possibly real terms.
All the experts the ABC spoke to now want the government to get on and get the National Broadband Network built.